Janssens. I'm a partner at Freshfields, based in Brussels. So as you can imagine, Guillaume and I sort of get to meet each other quite regularly. And indeed, I've got a few follow-up questions, and then maybe during the break we can always follow up with further discussion. Guillaume, you mentioned tech and innovation, and in a European context, that very quickly sort of leads us to the topic of so-called killer acquisitions. So the acquisition of small nascent competitors and the impact that may have on innovation. So it would be good to hear whether that topic, which is clearly quite relevant to tech M&A, also life sciences, whether that remains an enforcement priority of the European Commission, and maybe also a bit more provocatively, whether that can involve sort of a looking back, like we're seeing these days in the US in terms of WhatsApp and Instagram, etc., and how merger control in Europe would go about that.
So again, let's take a step back. I think indeed that discussion emerged some years ago, let's say 2015, after some years precisely about the mergers, the acquisition of Instagram that was reviewed at the time, not at EU level, but by the CMA. I think Instagram had 20 employees, something like that. And so, afterwards, there was criticism about the lack of enforcement by, merger control by enforcers generally for not, looking at that type of transactions and addressing, potential concerns raised by killer acquisitions. What the Commission did at the time was to launch a study. I think it was 2015 or something like that, 17, I forgot actually. And we looked at a series of transactions to see whether we were indeed missing a big issue. And I think what came up from that study is that indeed there were some deals that might have been anti-competitive, and in that case with a big impact, although the company that was acquired was still a small, potentially startup or scale-up, whatever you call it, but not a big company with no real turnover. So there were some cases that had been missed, but the proportion of cases was not huge compared to the number of acquisitions of startup companies that had taken place. So following that, the Commission decided not to essentially review its system, which is based on turnover thresholds, which obviously doesn't capture the acquisitions of startup companies that do not have a meaningful turnover. I'll make the long story short, but essentially at the time we decided to allow member states to refer to us these potentially problematic transactions under a very specific system of referral in Europe. And in the last 3 years, we had examined about 100 transactions, and we only went into a formal review of 3 transactions. Yet, very important transactions. One was Illumina Grill. Another one was, I'm not sure you've heard about it, about financial derivatives in Europe, in the Nordic countries. Another one was about Qualcomm Autotalks. But we reviewed many other transactions, and we decided not to pursue. So indeed, and actually the Draghi report is very clear about that, indeed, we should find a system that is effective and proportionate to make sure that we can review transactions that, the term killer acquisitions is a bit of a shortcut. I think it's the acquisition of companies that are nascent, that have a high potential, although they are, new companies, that may be killer acquisitions in the sense of killing a disruptive innovator. I think in pharma, there's, it's more classic, big companies buying a very new product, and the question is whether they will discontinue it or on the contrary, strengthen it. But there are also other areas, in tech, for example, strengthening the ecosystems in adjacent markets. That is another issue. So we're a bit in a specific now situation where indeed we see that it's not the bread and butter of merger control. As I mentioned, the big transactions are, horizontal cases in oligopolistic markets and so on. But still, this is a very important issue to address, to make sure that you can review deals that involve normally the acquisition by a big dominant company of a nascent player that has a lot of potential. Reviewing it doesn't mean blocking it. We had a look at NVIDIA Run AI, and we cleared it. We learned a lot. The market was but obviously that meant a lot. Looking at a transaction by NVIDIA of a company that is promising, was important. But we need to find the way where we avoid having more red tape and more notifications and so on, while being able to pick the cases that matter. I think like the US authorities can do, cherry pick, essentially having a voluntary system. We don't have that in Europe, but now member states are creating these conditions by calling in some transactions in order for us to review them. So that is, I think, the trend in Europe, is that you will see more and more that for deals that have a potential impact on innovation, although they involve the acquisition of small players, we will review them if we are asked to, and because if they raise issues.
Yeah, so I guess the lesson there is, regardless of whether your deal sort of hits thresholds, whether it's at EU level, whether it's at the level of certain EU member states, that's no longer really the issue. You should assume that if your deal sort of fits in that kind of fact pattern which you're describing, it may well be reviewed, including by the European Commission. I guess.
Yeah. That's exactly it. But again, I think it's not that every deal would be reviewed, or that we want to review every deal, but we want to have the means, if we see that there are potential issues that are raised, to be in a position to review them, and that will go through a system. We will not review the merger regulation for now. We're letting member states that want to have these powers to call in some transactions. And not only, by the way, potential killer acquisitions. There are other areas in Europe where this is an issue, in health system, for example, that we can review these deals, yes.
Right. Excellent, yeah. You mentioned a few times, Guillaume, the Draghi report, and also reviewing the merger guidelines in Europe. I'd be interested in hearing from you, do you sort of expect that to be sort of evolution or really revolution? And also maybe linked to that, on a certain reading of the Draghi report, you could sort of see it as an encouragement to somehow be maybe more permissive towards some kinds of consolidation in Europe, provided that they create certain benefits. And then the follow-on question would be, well, but what about sort of investment by US companies in Europe? Would they sort of benefit from the same framework, et cetera? So
there are two questions, right?
Exactly.
Which are very different. I think to the second question, just to be clear, there are no double standards and a special framework for EU companies or US companies. That is clearly not the case. We want investment in Europe, and we want to have that everyone abides by the same rules. But these rules are, to maintain competition. The interventions in the cases are not, I mentioned 5% on average. We don't intervene in each and single case. Let's be very clear. We intervene when there's a competition issue, and we have to have very, facts-based decisions. So there's no ambiguity on that. That should be very clear. Now, the first question about whether you should expect a change in terms of our policy to allow more consolidation, all of a sudden. I think, again, we have, there are difficult issues, the link between innovation and scale. These are topics for discussions. Some would argue that, mergers may in some instances facilitate innovation. Others might say, well, innovation comes from smaller companies, disruptors, and they gain scale by innovating. So there's this inherent tension to the discussions. We will be discussing those in the review of the guidelines, but there are two sides of the same coin. I think what we want is to be balanced and facts-based, and I don't expect a revolution in terms of our approach to mergers in Europe. Rather, an evolution in order to be able to take into account non-price parameters, that have not been explored before or only in the latest practice. And I think we need to systematize that, because we see that there are new ways to address some of the issues, especially when we are asked to look at a longer time frame, whereas normally, we have a time frame which is between 2 to 5 years. We can go beyond, but that is normally the approach. But now everyone is saying, well, you should look at the innovation effects in 10 years. So I don't have the crystal ball, but if we have to discuss what should be the parameters, that would be a topic for discussion, certainly.
Makes sense, right. Maybe moving on to remedies, where you explained the European Commission's general approach, which I guess you can summarize as preference for divestment remedies, but open-minded to sort of more conduct-style remedies where they can sort of fix the issue in certain circumstances. Building on that, and you mentioned Microsoft Activision in another context, but of course that's also an example of where remedies can play. My question is about what do you do when the European Commission may have one view to remedies, but other authorities around the world may have different views as to what remedies are, both in terms of a concrete case, but also sort of more fundamentally as to what can or cannot be appropriate remedies to begin with?
I mean, at least we've tried to be relatively consistent for the last 10 years. You have to know that in the 90s, the rate of interventions was much higher, but the remedies were much more behavioral, And we had a large study in 2005 or something where we saw that either the interventions were not really justified or the remedies in any event was a way to over-regulate the markets, whereas we wanted to have clean, if there was an issue, to have a clear-cut solution. And following that, we had remedies guidelines that are still in place that explain that the principle is divestment, and only in exceptional circumstances, some types of non-structural remedies, but that are very specific, meaning access, quasi-structural to allow contestability, nor not mere promises to, on prices or whatever. So that we don't accept. Now, we've been quite consistent for the last 10 years. I think there were different approaches by antitrust authorities around the world on remedies. So I don't feel that, we have to change so much. I feel that what we want is to make sure that we have effective remedies in Europe to make sure that this competition that works. I think we've been criticized some in the last years for accepting remedies in some cases, including divestments rather than blocking. And we feel that it was the right thing to do, and our decisions are reviewed by the courts, and our courts are quite strict on why we don't accept remedies. Yeah. On the other hand, we want to be consistent in the sense that there are principles to have on what works and what doesn't work, and on non-structural remedies and behavioral commitments, we know that there are many that don't work. So when we accept them, it's really under very specific conditions where we see that there's a very targeted and specific issue. On interoperability is a very good example, where you have very few access seekers. It's known by the market is positive on the solution. In Microsoft Activision, it was striking. The licensing remedy was essentially what the market is working under. You have these free licenses. And the market was asking us this. At the time, I think we were the first to accept that. We were heavily criticized at the time where other authorities were blocking the transaction. But now we see that the remedy is working, at least. I think it's quite pragmatic, but principled in that sense.
Yeah, I saw one of your colleagues mentioning sort of that the aim of the European Commission should be sort of to be boringly predictable, which
exactly.
in a way is quite a good thing. Picking up on sort of interplay with other authorities, I mean, not just in remedies, but more generally, on the cooperation with the US antitrust authorities, mm-hmm. Can you tell us a little bit about sort of how that just works, both in a day-to-day context of a case, but also more broadly at policy level, and of course there's a new administration on both sides of the Atlantic, so I guess people will need to get to know each other, etc.
So listen, I think there's been a very long history of strong cooperation between antitrust authorities on both sides of the Atlantic, with the DOJ and the FTC at staff level. You know, every time we have a global transaction, and that happens quite often, our teams are in contact. The parties generally, you know they have interest to give us a waiver to allow some consistency as well. Between authorities to understand the issues, to avoid double work and so on. So it's been a long-standing cooperation for years. We meet very regularly. And I think with the new administration, we had meetings. I was in Washington 3 weeks ago. We had meetings with my new counterparts to see how things would work. It's been working for the last 20 years, including with the first Trump administration. So maybe there will be changes in policy here in antitrust. I don't know. It doesn't seem that the merger guidelines will be reviewed and revised. So I hope, and I think that's in the interest of businesses to have an open cooperation with the U.S. authorities also. We'll see.
Excellent, Jared. You mentioned, Guillaume, maybe as a final point, cutting red tape. And obviously, I think in merger control, the system of a one-stop shop in Europe, as a sort of a consumer of the system, I think works really well. But of course, also the European Commission has introduced a foreign subsidies regulation, and then there are all these foreign direct investment regimes that have popped up in all different member states and indeed all around the world as well. And there we don't have that kind of one-stop shop. So is there anything you can say about that?
Well, I think it's the reality of today's geopolitics that started some years ago. Is that in Europe you have to know that the FDI regimes, the equivalent of your CFIUS, right, are handled at national level, not at EU level. Maybe that's for the future, but it means that member states keep the power over the review of their own security interests, which means that, and there's been a proliferation of national regimes for FDIs. You didn't have FDI's reviews in many member states, for example, in the Netherlands and so on. And I think you've seen these systems emerging for good reasons. There were challenges with Huawei, with all these companies, and there were critics in Europe that were saying, well, these startups are taken out by some companies coming from the Far East, and there's no control about our security interests. So that's the origin of these systems being created. But obviously, it creates a challenge for businesses, including in Europe. It's not only for the US or non-European companies. Is that they have to file not only with us for a large transaction or with a national authority, but also very often in various national systems for the FDI purposes. And obviously there's a concern, that these FDI are not, the process is not as, I think it's like in the US, it's a very specific process, and that creates hurdles for companies. So that is the reality of today's world. I hope that there will be improvements in the future, but that is unfortunately something I can't really deal with. Yeah. I'm not the head of the FDI national regimes, but that is the geopolitical reality in Europe as well. Yeah. There's one in the US, but it's at federal level. It's not the case in Europe.
Excellent. All right. Well, thank you very much, Guillaume. I think your remarks have really helped this audience to understand a little bit more about how European merger control is applied in practice. So
thank you.
Thank you.
Thank you very much.